Everybody is talking about soft life and building wealth, but how soft is life if one emergency can mash up your savings? Today, we're talking about why protection is the real power move. I'm your host, Cody Ann Barrett, and I'm joined by Chris Lawe, VP of Individual Life at FFK, aka the Spartan Boss. Chris, welcome to Living Fully.
Thanks for having me, Cody.
So let's start here. People think that insurance is for old people. I also thought that for a long time too.
Right,
So I'm also the people,
right.
right? What do you say? Is it for old people?
Well, let me start off. Certainly, it is for old people, but
Mm.
it's not just for old people.
Mhm.
And the reality of life, Kodan, is that for persons in their 20s, especially, insurance is a power move,
Mhm.
right? It's when you are young, you're
Mhm.
healthy.
Mhm.
It is insurance goes more or less strictly first by age, then by health, and then by other factors. And so to me, it's a no-brainer. Get it while you can.
So to a 25-year-old, a 24-year-old, is life insurance something that they should have on the forefront of their minds?
Yes, it's something they should have. Once one starts working in the real world, you pass
Mhm.
holiday job, you're gone out there, whether working or work on school, whatever your situation is. Once you have an income, you should start to budget, of course, we hear about that from in prep and primary school, but you should start to dissect your life's trajectories. Now, coming in the business at age 22, I had the benefit
Mm.
of seeing and profiling and carrying friends and clients through the 20s and 30s. The thank yous come raining in later on. And so it's that early placement while they got it young when it was cheap. There are things like critical illness, which we are now a lot more aware of than we were years ago. And so for young persons pushing out, you have to get your critical illness insurance. You have to get your life insurance when you're looking at things like mortgage and again those life trajectories.
Mhm.
Mortgage, you're going out for a motor vehicle loan, you'll eventually, for most or some of us, will get married, we want to have child or children and families. Insurance and precedence of insurance must come into play.
Okay. So one of the things that I've been told when I was younger is, oh, you don't need it right now because you're so young. And I think a lot of people still have that
That
mentality.
expression,
I'm so young and that's for kids. I don't have kids yet. So why do I
right?
need it?
I don't have no child.
Yeah.
Right. Um, and again, scaling back quite a few years ago,
Mm-hmm.
I realized that I ended up interfacing every now and again with the parent of who I'm trying to,
Mm-hmm.
convince into
And you
some
realize,
protection. And so you end up have to take them on too because
mm-hmm.
they're trying to guide the child to,
Yeah.
you want to move out at some point and, save your money. We still taking care of you. But when you start working in the real world, life has started.
Mm-hmm.
Life has started. And if in my 20s I can commit to something that I'm going to be paying fractions of the cost than if I wait until that chick or child or responsibility comes, then that's the point where you're going to come crying and saying, hey, it's too expensive or I can't get it.
So that life insurance is not just a later thing, it's a level up thing. You said something earlier. Get it when you're young because it's cheaper. The premiums are cheaper.
Correct.
Can you explain why is it getting or how a young person can really benefit from insurance if they get it really early?
Well, I would say more or less one, the cost, and
Mhm.
you're locking in your opportunity, right? Quite often when I was younger, I always used to say my sales meetings, right? And at that point, I'm face to face with my contemporaries. And I said, boy, we young people, we think we're bulletproof, right? And so,
But you have time.
and we have time.
Yeah.
We have time. And so, again, having such a long career in the business over 20 years, seeing the profile of, I remember a good friend of mine that I sold early in my career, he had no clue that he had hypertension, right? Regular young fellow in our 20s, we co-mingled and became friends through the car scene because I was into cars and that kind of thing. And in taking out his life insurance policy, he found out that he was hypertensive. And in finding out that he was hypertensive, it kind of shocked him at the time in his low 20s, right? And he went out and he is a completely different person. This is someone who, from his younger to teenage to young adult years, was a pudgy person, a bit, have a little weight on them. And because he realized, and with talking to the doctors and so forth, that had a contribution, he literally he was a dormant person and became a total outside activity, started riding, walking, running, gym, and now, and for the past 20 years, he has been slender as a broomstick, and he has lost the hypertension. The hypertension carried his premium sky high, and he
Wow.
was in his 20s. So that's a unique scenario, but as time and age and life has it now, we see the things coming out and we see the illnesses. We see people getting cancer in their 20s, their 30s. And so we're realizing we're actually not bulletproof.
Yeah.
Insurance is a unilateral contract. When you sign up, we can't change anything about it. And so even if you become later on illnesses or bad health, we can't change your policy. You end up having children later on, you're protected. You want a mortgage later on, you need insurance for the mortgage, mandatory. You have it already.
All right, so Chris, insurance is one of those things that we add to our expenses every month, right? But when we're just starting out, and I said you just start working,
Correct.
then you talk about savings. First, the conversation is save. And then people go to investing.
Right.
Normally, life insurance is like long after when people probably hit a certain age,
Right.
and maturity really kicks in.
Right.
That's when they start to think about insurance on that level.
Right.
How can somebody really balance all three, especially a young person who, already thinking about saving and investing?
The balance one, I would start with correcting the language. Right? You stated it as an expense, right? Insurance is an investment. Insurance is an investment in your peace of mind. Certainly when life starts happening, mortgages, loans, business, family, marriage, right? There is also the fact and factor within the time frames of your youth. Take it while you can. There's no other opportunity. If you go to the doctor next week and you are diagnosed with an issue, whether it be the big one, the big C, or whether it be just an ailment, if it's a small ailment, you're going to be charged extra. If it's a big ailment, we're going to say, we want to, I'm sorry, but we can't. We can't take on that risk. You should have come to us before the fact. You can't go to a car insurance company with a written off car and say, hey, please insure the vehicle. It's outside on the record. You insure it before the fact. And it's the same thing. We're not trying to replace the human life. We can't. You're priceless.
What's the cost? What's the real cost of waiting too long?
Decline.
Wow.
The cost is it's no longer available for you. And so now having not child, if you decide to change that at some point, maybe, and in these days, ladies are having kids a lot later. So if you make that decision when you have a late child at 41, and you come to me and ask me your premium compared to when I came to you first at 22, I promise you, you're going to cry. Because it's going to be double and triple. And if illness is in the picture, multiples of the amount that you could have been paying from then till that kingdom come. And the caveat the expense is that it's an investment. We have programs. There are different types of insurance, but we have programs where you are investing in the program and the policy. And so leave it to run for a few years and you actually get back your money plus income, plus interest. And so you are in a beneficial situation, even with your monetary output. And that's why I convert the verbiage. It's not an expense, it's an investment. And from upfront, that risk of that large amount of coverage, the risk is not placed with you, it's placed with the insurance company.
That you described, that's what they call term life policy. What's the difference between term life and whole life?
Term life and whole life is, I would say, the easy and layman's is simple, where term life, and I like to use real life easy examples. Term life, you're paying rent.
Okay.
And it has a time frame. So you have a 10-year, a 20-year, a 30-year. When the time expires, that's it. It falls off a cliff. Right? The whole life now, that takes you straight through. Different companies have different verbiage, but till at least age 100. And so it carries you your entire way through. So you don't have to worry later on if something, happens later in life. There's still the coverage there. And then, of course, there's the investment values growing over time.
Rider, what is that in plain English?
What is a rider?
Yes.
A rider is, you have a main standard policy. Riders are additions to the policy.
Okay.
So they're like add-ons. It's like you have your home internet, right? Or you have your home cable, and you add on Wi-Fi.
Okay.
It's like add-ons to enhance the package.
This is something that somebody can do if they don't really have much. They can start with something and then
put together a package. If you have life insurance,
okay,
you can package term insurance attached to the whole life insurance. You can attach premium waivers. You can attach different elements. Family protection. There are different little.
So term life would be the foundation, and then riders would be the add-ons.
Whole life is the foundation.
Okay.
Or universal life, and then you have the riders. Term life is the base plan, and for some you can actually have riders on the term plan as well.
Okay.
Right.
So somebody just starting out 24, first job, they can get something basic.
Yeah.
And then do the riders.
Correct. Yes.
As they earn more, move up, they can add on.
Correct.
And improve on it and probably increase the coverage, right?
And increase the coverage. And there are different strategies you can use. And of course, I at that point would invite you to have a conversation with your advisor, call us if you need some info. But really and truly, with the term insurance, term is quite a lot less expensive. And so one can start with a term policy, get larger coverage for cheaper, and then convert it over time as the income increases or the situation changes.
Okay, I've heard of universal.
Right.
What is that?
Universal is similar to the whole
whole life.
Right?
So it's the same thing, just different
verbiage and different terminologies. Yeah.
Okay. So one carries you up to 100 and one has specific term that depends on you. You determine how long. That can be 10 years, 20 years.
30 years. 30 years is the maximum term policy.
Okay, so basically start small and then scale up over time as your income improves.
In a sense, yes.
Okay. Is that the Spartan formula?
It certainly is. It certainly is. Again, the Spartan team, our demographic tends to be, we're mostly younger.
Okay.
The demographic tends to be a profile from the low 20s up to 40s. We have a few sprinklings of senior advisors, but with that you find the transitions and the ease of networking and that kind of thing. So the Spartan way tends to talk to a lot of young persons, and with that, get it in place and enforce, get some coverage, start somewhere, grow over time.
Have you seen an increase in more younger people taking up insurance, life insurance? Because you said that Spartan really caters to or has more young people now, right?
I would say that the dynamic that I've seen in the industry is critical illness is on the airwaves. Critical illness.
Okay, so it's mostly critical illness.
It's a lot of, you'll find the young person spark with the critical illness first, and, depending on...
Because that has immediate benefits.
It has immediate
life insurance is not really for them.
Correct. So when the young persons come to us is when they're ready for mortgage. So you find, the thank yous that I talk about reining in later on, it's when I come to you early, I sell you a policy, and it's when you go for your mortgage 3 years later, 5 years later, 7 years later, and you realize if you were just taking out your plan 7 years later, you realize what you would have been paying because you have your policy already. You realize your premium is low because you have it when you're young.
Dealing with so many young people, what's the most or misconceptions, I would say, that you've heard from them?
The misconceptions is in line with what you're querying. It's that I don't need it now. I
Okay.
know what am I covering? Why should I have this now? And as I
I don't
said,
have any beneficiaries
I don't
yet.
have any beneficiaries
Yeah.
yet. You know what I mean?
Yeah.
And the reality, even at a base level, that is not true. You start working, you shouldn't be a problem to anybody. So
Not
even if you
not
pass,
even your parents.
not even your parents,
Yes.
so even if you pass, where your coffin money there? You know what I mean? Just from a point of responsibility, and you see that's the graduating process of life, youth, and aging. You're under the care of your parents,
Mm-hmm.
and that's a process that takes time to wilter down. And so you just move out. Mommy's still bringing your Sunday dinner sometimes.
But you know, Chris, that also takes some level of maturity for people to think as well.
Certainly,
You know, if some people still think I'm my parents' responsibility, they're not thinking
they're not mature,
about helping out their parents if something should happen to them, you know.
and that is it. And that is it.
So that's also why coddling is not good. All right. So what are some of the benefits? People also talk about living benefits from life insurance. And for the people who think that life insurance is only for, when you're dead and your children get something, are there living benefits?
There are living benefits. There are several different living benefits. So we can start off with the conversion of the expense to investment. It has an investment value. Being sold the right policy, you can build up significant monetary accumulation over time.
Mm-hmm.
There's the critical illness benefit for critical illness coverage. That's if you personally have or get a critical illness that is paid out directly to you. And so you're able to deal with the life matters that don't stop, your bills and your mortgage and all these things. We have disability waivers, which is where if something happens to you and you can't pay the premium, you're permanently disabled. We actually take over the premium payments. And there are several different living factors. Of course, we have our health insurance and all of those other benefits as well, which is as you exist.
Doubling back to conversion, what role does that play? We talked about you starting out with probably term life because it's cheaper.
Right.
As you mature, as you earn more, or whatever reason, you can add on. Um, what role does that play in really shaping policy, and how do clients see insurance with this option available?
The term life option tends to come in when there is a cost saving element.
Okay.
You need the coverage, but you want to get it a little cheaper than what the owning it allows, right? And that's just the relating to the rent versus mortgage. So you have a time period which, if, for example, you're taking out a mortgage, you take out a 20 or 30-year mortgage, right? The mortgage is your current intent. Right? Hopefully, you'd have had your family coverage and whatever otherwise. And so you may want to take out the cheapest coverage available because realistically, it's to service the mortgage. And so
You can do
the
the term
term
life,
coverage
right?
comes into play.
All right. So one of the things that I've heard, which I ask you misconceptions, I never heard you mention this, but I've heard a young lady said she don't want to get life insurance because for house, because then the life insurance money go to the house, my family won't get anything.
Mhm.
I realized I don't really understand, because if the insurance pays off the house, then the family gets the house
Correct.
mortgage free.
Right.
But I think what they don't, what the misconception is the family wouldn't get any cash.
Right.
So and I need you to explain,
Right.
can people have more than one insurance for different reasons, different beneficiaries?
Right. So one, your policy count does not
Mhm.
matter. When you're in the insurance world and you're talking to an insurance professional, your policy count does not matter. It's your coverage that matters. So the coverage would be adjudicated based on if you have a good agent,
Mm-hmm.
right? And if you don't, please call Spartan. But if you have a good agent, your agent will tell you when you're taking on, your agent should be involved in the process. So even if they sold you a policy before, right, and then you're now using it for the mortgage, that agent should advise you that you need another policy or
Right.
you need additional insurance, right? And so you either upgrade or take on another policy with the additional amount.
All right. There are some Jamaicans who don't believe in insurance because we've heard many stories about family relatives offing you, unaliving people
Mhm.
for their insurance, and
Right.
some people taking out insurance, on a family member with ill intentions. So
Right.
people kind of scared.
Right.
What would you say to those people?
Right. I would say the reality is, and if we're talking or plain local tongue,
Yeah.
scam of them there. So,
Yeah.
it's that time in terms of you have to be careful,
Mm-hmm.
right? But the reality is that with insurance, when you take out your plan, you're paying your premium. It's a guaranteed process. So once you have the right plan, you have the right agent. There's nothing to really worry about in terms of whether the plan will serve true to your purpose or not.
How would you describe life insurance to a Gen Z or millennials?
How would I describe it?
Yeah.
I would describe it as a wealth building and protecting tool and asset.
Mm-hmm.
And just simply because I think I generally understand how they work and how they think, right? Behooves me sometimes. But I get it a little bit.
Yeah.
Two significantly younger brothers. So yeah, you try keep up with the time. But yeah, I think it's genuinely viewed, described, and explained the right way. It's really a wealth building and a wealth transfer tool. It's an asset.
But also the importance of selflessness, right? Because everybody wants to benefit, but nobody wants to be the one to create or start anything, you know?
And that's the beauty of how some of our universal plans are designed, because selfish or not, it serves you, right? So you're putting down X amount per month. And eventually you have to wait a little bit. You have to commit to it for a while. But there will be a point where you will end up in profit. And so ending up in profit of your personal spend to be able to protect from day one, right? Remember, you nor I, well, I'm not sure about you. I'm not so sure. I don't know. I wish I knew, but I don't know the day that God will call me for service.
All right, so some takeaways: start where you are, and then add-ons, which are riders.
Correct.
Um,
Add-ons and/or additional coverage as you grow
yeah.
and your income grows.
And also start early because the premiums are lower, more affordable, right? So even if your income grows, the premium stays the same unless there is inflation added onto it, because sometimes it
No, that's
increases.
optional. That's
Okay.
optional. That's not the coverage itself. So that increases the coverage as well.
Okay.
Right.
And not just critical illness, because you said that's the most common one. Everybody's like, let me get critical illness because yeah,
critical and health insurance. Jamaicans don't want to hear about life insurance on your day to day. But getting a real conversation, Cody, the reality, take me for example, right? I'm a father of two boys, right? Now, for me, and this is real life talk now, not because we're talking insurance, and that's what I feel. As a parent, as a father who love my two boys, that is not conditional as to whether I exist or not. And so I have two children that I'm responsible for that go to Hillel Academy. So them school fee not cheap. And so if I am removed from the picture, if God called me for early service, what do my two innocent boys do? They are 8 and 6 years old. What do they do? How do they pay their school fees? How do they get food on their table, shelter above their head? And how, when, especially in this day and age where college, masters, all kind of things are important, how do they go to college? I am irresponsible if I am walking on the planet living the life that I live, which I think is a decent one. I've done okay, and I'm happy and thankful and gracious for that. But that extends to my children. They did not ask to be here. And so I have a responsibility for the extent of my parental duties, which in this day and age, as far as I am concerned, my opinion, goes to a master's degree. And so I need to pay for that. If I'm not walking on the planet and I'm not earning an income, how will I pay for it other than insurance at this point? And I say that specifically, in conclusion, I'll tell you that fungus not upon my money yet. It's not so old yet. Right? I've done well and I give thanks. But I need time to set the foundation that my cash can deal with if I'm not here, if I lose the income, if they lose the income now, right? If they lose the income now, then what happens? And what kind of parent am I? To go and be sweeping the clothes with God, having fun, and my 2 children are down here suffering. No, I'm not that kind of
Let's
parent.
flip it. Let's flip it, Chris. So we talk about insurance from our parents' perspective
Sure.
to give back to your children.
Sure.
But how can young adults who probably have parents who don't believe in it, refuse to get it, how can they get insurance on their parents?
And insure them, pay for it. Mommy, please sign these forms. Daddy, please sign these
So you don't.
forms.
So it's not like
You don't believe in it, and so you are not leaving me covered.
yeah.
I need to ensure you are saying, if you die, no problem, just throw me in one pine box. I am not going to disrespect you like that. And so I need to ensure that if something happens to you, may at least have your little funeral and night money.
Cut off time. What age is too late? For I want to insure my parents.
I mean, too late technically is 80. I mean, we have a company that goes up to 90. Right? Because again, remember, we're brokerage, so we serve the client and we reach for the policies that suit you and benefit you. But I quote you something at 80 years old. I promise you.
The premium's gonna be
Don't
high.
want to pay that premium. You're gonna have to, and we've had cases.
So basically, for anybody listening that is probably 25, and the parents still relatively young, like 50s, 60s, thereabout,
Right.
they could probably consider insuring their parents.
Even if they're aged, check it out. We can program little things, and cost is relative also, so expensive is relative.
It
to
depends
the
on each
age.
person.
Yeah. And it's still good to have something. So check it out.
What's the max amount coverage that somebody can get for their parents if they're like over 60?
There's technically no max in terms of the policy or programs having maximum insurance coverage. Some specific plans do, but insurance generally. Persons have what we call in our business insurable limits.
Okay.
So just like a motor vehicle, again, you're not going to insure a Toyota Corolla for a BMW X5 value. Similarly, we calculate your earnings, your net worth, etc. If needs be, to go into technical calculation, and it's based on your income. There's a general maximum.
Can someone insure their parents even if the parents dead set against insurance?
No, absolutely not, because you cannot insure an adult without they have to
sign off and give your ID.
Correct.
And all of that.
Correct.
So they have to be compliant. Your parent has to be compliant.
So KYCs, all of that automatically comes into play, and so you can't just insure a person. In certain situations, you can own a policy, but the person is still involved in the process.
All right. True. Okay. So protection first, flex after. That's the real power move. Chris, I have 2 questions to ask. It's a game. We call it safe or sorry. So you tell me if this is safe or sorry. Or asking a question. Okay. Buying the new iPhone 17 before paying your premium.
Sorry.
Right?
Very sorry.
I mean, you look at the cost of the premium and cost of the iPhone 7 is a no-brainer.
It's worlds apart. Plus, responsible versus, keeping with the times.
Paying partner faithfully, but skipping insurance.
Still sorry, but I get it. But still sorry.
Yeah.
Still sorry. You have to budget. You have to pay. Just say your light bill coming. You have to pay your light bill. That's how your insurance should be viewed. That's genuinely how your insurance should be viewed.
Chris, is there anything else you want to tell our viewers about life insurance, or just one really important advice? I would say, yeah.
I would say, one, check it out. Check it out with an open mind and
Yeah.
listen to who is in front of you, right? The field force, there are, just like real estate, just like car sales, there are a lot of agents out there. They're accessible, but find a good one,
Yeah.
right? And connect with them. There are a lot of life stepping stones that if you have the right conversation with the right advisor,
Mm-hmm.
they will save you a lot of money over time, and they will put you in a process that the trajectory of your life stops are easily or more easily able to acquire and accumulate.
Mm-hmm.
Right? So have the conversation with an open mind.
All
And
right.
stop putting do not answer as them them name in your phone.
Because some people think that life insurance agents are annoying. Some people think so.
And
And some people think they're a little it's how they approach it. Yeah.
Cody, let us be real. Some of them are annoying.
Yeah, some
And
of
that's
them
a
are.
fact.
Yeah.
And so again,
And the
no,
approach is a
no,
little bit wrong.
yeah, no disrespect to the industry and whatever it
Yeah.
is, and different things appeal to different people. So the same person you think annoying, another person think is amazing,
Yeah.
right? But my tact, my style, we have conversations.
Mm-hmm.
Right.
All right, Chris. So thank you so much for breaking it down with us today. And you watching?
For having me.
Yes. And for those watching, remember that insurance isn't about fear, it's about freedom. When you're covered, you can truly build, enjoy, and live fully. I'm Kodian, and this is Living Fully, presented by FFK, solving tomorrow's problems today. See you next episode.